Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York on Friday. Happy Aloha Friday, as we say on the islands, 23rd day of October 2015, and this is the daily report for gold and silver, our weekend review, and we absolutely are ending this week on a lower note in regards to gold. Gold closing off in essence unchanged today, 1164 and change off of a low of 59 and a high of 79. So we've had a pretty decent range on the day, but we're absolutely closing pretty much towards the lower end of the range. When we look at our weekly chart and our weekly candle, we can see the week expressed right here, and we are certainly looking at a lower week, a week that genuinely traded to a high of about 1180 and actually opened at about 1178 right in that area, which is also the area that we pulled profits on our trade that we got in at 44. We have remained flat on today's video report. I will talk to you about what I'm looking for next week as well as our current strategy. Now, we are looking at our daily chart, standard candlestick format, and when we look at that and put our week into review, that would be these 5 days or trading candles. We've got Monday, in which we had it open at the highest point in terms of the real bodies of this market. Tuesday, we did have that little update. In other words, we were down a bit. We were up about $6 on Tuesday, but Wednesday, this market really got trashed. And then, of course, yesterday, we had that doji-like candle, which we are also getting today, these consolidating candles, which brings into question whether or not we're witnessing any type of real solid support in the market. And to be quite honest with you, I'm not seeing it as of yet. Now, if you recall from yesterday's show, we were looking at a possibility, because we did have a doji that appeared, that we could be looking at some sort of a reversal in the market. And that would be, of course, based upon today's activity. And today's activity would have had to really kind of unfold as a solid up day, a green candle with a higher high and a higher low. It would have looked something like this. However, we absolutely did not get that. So we're looking at yet another consolidating candle. So we are certainly still in the deep throes of a fourth wave correction. My question was whether or not we'd see some sort of ABC, and we postulated the fact that if we did, and this of course was yesterday, we would have gotten some sort of reversal today. Then we would go into some sort of a B or a bounce, which could take us, and I have adjusted these to today's low because obviously we didn't meet the criteria yesterday, but some sort of an upside bounce, whether it's 50 or 75% that of the move we saw in A, and then some kind of concluding C wave, which would really terminate the fourth wave. And then, of course, that would be where we'd look to buy in the market and actually see this market go into a rally mode once again. However, we have absolutely zero evidence, in fact, evidence to the contrary, that we found any kind of support, because, in fact, now we did get a higher high. This market did really move overseas, and we did get a lower low, so we got a greater range on the day. Market closed in essence unchanged from where it opened, and also it is a consolidating candle. So with all of that in mind, we want to see obviously how it opens on Monday, but my sense is that if we get some sort of a confirmation that the first part of this corrective period's over, I am looking for some sort of a bounce at some point. We would get long here, and we would look to exit the trade somewhere in between 1176 and 1184. We could either initiate a short position, because if in fact we do have a clear cut signal that we're going into that C wave, we've got quite a considerable range that could cover, about a $40 range on the market. And so therefore we'd look to sell it and then look for where we're going to find some support in the market. Now, we've been basing our support and resistance really upon a fib study, and the fib study that we're looking at, the fib retracement, is really taking us from this rally at 1180 up to the high roughly at 1192. And that being said, we've got a couple of markers. We've clearly broken below the 23% retracement. There's no other way to look at it. We're simply not finding support. Now, that could all change on Monday, but if it does not, I believe that this particular corrective wave that we're in has nowhere to go initially, but possibly below the lows that we hit today, which are roughly 1160, 1159 in that area, and possibly test 1150, because that's the next real area that you would have to look at in terms of where we could see gold prices go to. Now, traders, if we take a wider or longer view of the market, which is what we're doing now with this weekly chart, and look at some real key levels of support and resistance based upon these studies, and realize this is a very, very long-term study in which we're looking at 1307, the highest point gold has traded to all year, to the lowest point gold has traded to all year. And so we're looking at quite a spread in the market. When we look at our 50% retracement level, which comes in at 1189, what we find is that that is where we have absolute resistance in the market. Cannot be expressed easier than that. We definitely have resistance here. At the same time, when we look at the 38% resistance level, and this of course is 1161, we can see that the low that we hit this week is roughly at this point. So that is another factor to absolutely look for some sort of support in the market. But we have to say we certainly have not seen that as of yet. And lastly, yet another reason that we could find some sort of support, as I said, in the area of about 1161, is when we look at our former high right in here. That is the point when it actually popped above that, but on a closing basis could never hold any sort of ground. So the fact that if we see some sort of support come into the market based upon these retracement areas, that would be a very, very good sign that we're actually going into that kind of a bounce that I'm looking for from here, bounce, and then back up like that. That would be our B right in here, and then a final C wave. So we'll have to see really how this market trades throughout next week. We will remain flat over the weekend. We pulled profits earlier in the week at 78. Market is much below that, so I'm comfortable with that trade into where we got in as well as where we got out on the trade. We'll look to see if we find any kind of support on Monday morning, and then we can act accordingly. If we do get a solid break, we could easily see this market go back to about 1149, 1150. If we have some sort of support, as I said, based upon the studies that we've done, it could go as high as 76 to 1184 if we get the bounce. If we get a break, it could go as low as about 1149. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you on Monday for another daily update and review. Bye-bye.